we know Bitcoin ETFs are the most successful product launch like in history. And then someone says, well, if you're going to collect that much money, Bitcoin goes to the moon. But it turns out Bitcoin's risen, but it's kind of churned. I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
It's a wash.
Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's 100,000. They're not looking to, they don't care if Bitcoin goes to a million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the institutional world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening
I have this wrong.
Bitcoin now.
We're trying to find explanations for what's going on with Bitcoin. Were you pitting that on tightening liquidity?
That is one of the explanations. So there are a couple of things going on in Bitcoin that are interesting. First, there was a flash crash in early October. And that, for Bitcoin itself, it was a 14% move down over 2 days. Maybe not that drastic, but some of the altcoins really got sold much, much harder. And after this flash crash, we saw that the flows into the Bitcoin ETFs and so forth really changed. So the flows really never recovered, and so retail was apparently somewhat shell-shocked by that day, and we saw outflows. The other thing that happened is that I think a lot of the institutional investors trade Bitcoin with a bit of a trend-following mindset, and so we broke some of the moving averages that they tend to look at, and that is also reducing the source of demand. But the third point is what you were mentioning, and that is that the liquidity, which we measure by bank reserves on the Fed balance sheet, dropped by a bit more than 500 billion. And that happened because the Treasury increased the Treasury general account at the Fed by selling a lot of T-bills. And there were two reasons for that. One is why this TGA account was so high. One is that that during the government shutdown, the Treasury didn't spend as much, so that account rose mechanically on the back of that. But secondly, they did sell more T-bills than is typical. And so we are thinking going forward, the liquidity squeeze, so that explanation for the Bitcoin weakness should actually get much better because we expect TGA to at the very least flatten out and probably decline, meaning bank reserves and liquidity should improve between now and the end, partly because of the reopening and partly because the Treasury sold so many T-bills already.
We are expecting for there to be many hours of meetings ahead of the event tonight with the First Lady, but we're told this is more than just about pomp and circumstance. The U.S. appears eager to deepen its economic and defense ties with the Saudis. Trump telling reporters on Monday he's ready to sell the kingdom F-35 jets, but there are concerns the aircraft's technology, which is considered top of the line, may end up in the hands of other countries, including China. Still, the president believes the U.S. and the Saudis can deepen their ties to help stabilize the Middle East.
They've been a great ally. They've got to like us very much. Look at the Iran situation, what we did.
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves.
Today and tomorrow, we're going to announce that we are going to increase that $600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas. And the agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the $600 billion will be $1 trillion.
Definitely, because what we are signing to facilitate that, and
I like that very much.
He works hard. No, that's great. I appreciate that. That's great. We're doing numbers that nobody's ever done. And in all fairness, if you didn't see potential in the U.S., you wouldn't be doing that.
Definitely.
You don't want to lose money.
As you said, Mr. President, it's the most hottest country in the planet. But what you're creating is not about opportunity today. It's about also long-term opportunity in the rest of America that will affect American economy positively in the next coming decades. Preparing the right foundation of emerging technologies, that's a game changer for America in a good way, and we want to be part of it.